Please, if you join me, can I see? Can you just give us a thumb? If you are joining, please give us a thumb up. If you are joining, please give us a thumb up. Can you hear me? Can you hear me clearly? Can you hear me? Can you hear me? Please, if you can hear me, can you say yes? Just shout yes, say yes. I can see some people saying yes. Okay, thank you for joining. I think many people can now join the class. Thank you all for joining. Okay. We will start the class in few minutes. I don't know, we should wait for some persons so that we can start once. If you can still hear me, can you say yes? Can you type yes? Can you type yes? Can you reply yes? Okay, in today's class, we'll be looking into introduction to stock investment and the stock market. Then we'll be also looking into what is stock, what is the stock market. Then we discuss types of stocks, and then how to invest in the stock market. How to invest in the stock market. Okay, now let's start. Let me start with the introduction. We have been hearing what is stock, hearing stock all up and down. People are talking about stock investment, the stock market, how they make money from stock, from different people, from people who we think they are investors. At times we think these are because the markets or the stock investment wish to favor them or one thing or the other. Then what is then stocks? What is then stocks? Okay, stocks. Let me say a stock is a piece of ownership of a particular company. A piece of ownership of a particular company. That means when you are owning a particular stock of a particular company, you are also owning that company. You are also partaking in the ownership of that particular company. Please, can you hear me? So whenever you are having a stock of a particular company, you are also having a part ownership of that particular company. So that is exactly what is stock. That is exactly what is stock. Now, we have been hearing that people make money from stock. Then, how do people make money from stocks? How do people make money from stocks? So, if in actual sense, in Normal reasoning, someone that owns a company must actually make money from their company, either by growth or by profit. Okay, so but let's follow our outline for today's class. So now that we have introduced stock, and we have tried to understand what is stock, which I say that stock is a piece of ownership of a particular company. When you are owning a stock, you are owning a percentage of that company's ownership. You have become part owner of the particular company that you are holding their stocks. Okay, so that is exactly what stock is all about. Now let's understand this. Many people will think that they are too young or too old to invest in stock. Many people, when they are hearing this, they might feel, is it not people that are already working that will be investing in stock? Am I not too young to start investing in stock? Because actually, maybe if you're kind of someone who read book like me, you find out that people who have written books about stock are actually people who are writing it from the point of their retirement. So they will actually tell you how they have been investing since they are working to they retired. That means they are writing all this from the point of their retirement. So you might think that maybe it's actually people who are working for professional job, civil servant that needs to invest, which this is not true. You can invest despite whatever you are doing, that you are making money, even when you are not actually making cash directly. You can actually invest other kind of income, or turn it to other source of income to investment. Okay, so you are not too young or too old to invest. You are not too young or too old to invest, especially in the stock market. So maybe you think that you are getting old, that you don't need to invest all of that. Even if you invest today, in next 20 years, your children, even in next 50 years, your children will still have access to that particular stock if they have your detail. So you are not neither too young or too old to invest. Do we get this? Please, if you can hear me, can you say yes? If you can hear me, give me a thumb up. All right. Can you hear me clearly? So, people have been talking about investing, people have been making money, talking about investment, how to sustain their money, how to protect their money. How to grow and protect their money, how to multiply their money. People do all kinds of work and all of that. Then, people who actually have the sense, let me say, who are financially knowledgeable, or who have financial intelligence of keeping money or multiplying money, will find a way of either saving or investing their money. They will find a way of either saving or investing their money. Then what will help you to save or invest money is one thing: financial discipline. One thing that will help you to save your money or to invest is financial discipline. There's one thing that happens if you're actually earning maybe little, or you are just making little money and you don't have financial discipline. Maybe you think that the money you are making is very low for you to save. You think that maybe you're the kind of person, your salary is 30K, you feel that this 30K, if I spend, I can even spend every other thing, so there's nothing to save or to invest. This kind of mentality will keep you that I don't need to invest now, no, or because the money is not much, the money is very small. But actually, it does not matter how much you save, it's about you saving it, because you saving it is building a kind of financial discipline. Because if you don't build the habit of saving first, you can, even when you are earning 1 million naira, you can still finish all of them. Because if you don't cultivate the habit of saving when you have little, even when you have millions, you will actually spend all of them without saving. Because saving is a habit, it is a kind of financial discipline that you need to build. And when you build that, is when you are getting even much, you can be able to save even higher. Let's assume you are getting 30K as a salary and you are not able to save at least maybe 4,000 naira or 2,000 naira, just any amount. It does not matter how much you are saving at that little that you're in, but the main thing is you building the habit of, whether this thing is very small, I need to save something. So if you can't save when you are earning that 30,000 naira, you will find out that it will be hard for you to build that habit of saving even when you are earning millions. So, and one thing about it is that if you can save when you have little, maybe when you are earning 30,000 naira, you are saving like let me say 25%, or just a little. Maybe you are saving like 10%, or all of that. Maybe you are earning 30,000 and you are spending saving like 6K, all of that. You find out that when you use this remaining 24,000 to sort your bills and all of that, you manage to someone is saying that he cannot hear me. Please, if you can't hear me, you should actually know that something is happening with your own network or at your own side, because many people here can hear me. So one thing is that when you can save maybe 10%, 5% when you are earning little, then when you even earning big, earning much, you can be able to save like 75 or even 50%. Because then you will build the discipline of saving and not lavishing money. There's what is called frugality. When you are trying to stop buying what you don't need, because at that time that you are saving from little, that kind of habit, that kind of discipline will help you to filter what you need and what you don't need. And then when you are earning much, you can then know that this money that is coming is not for spending. This high amount that is coming, it is not for saving, it is not for spending, it is actually for investing or to build something better. So maybe then you find out that a month what you just need is maybe 30,000 naira, and then you might be earning up to 500K or 200K. You find out that you will be saving or investing high amount of money. I hope you get this. So when you cultivate the habit of saving, even when you are earning little, it will help you to save higher percent when you are earning higher. Because you will first build financial discipline, build the habit of saving, build the consciousness of not lavishing money. That is what they call frugality. So this will help you even when you are earning little. Try to save small. It does not mean how many percent you are saving, but try to, even if it is 1%, even if you are earning 20K, try to say, I will be saving 1% of this 20K. It's not how much it is, but try to build the discipline of saving. Then I will also talk about investing, because what we are here for is actually investing. Now, let me try to differentiate between saving and investing, because saving will help you to protect your money but investing will help you to also protect your money and also multiply your money. Get this, saving is like people can actually save money in their bank account, and from year to year it will actually return like very little percent that the bank will pay them, or at times bank will even charge you for keeping your money there, for saving it, okay. But when you invest, you are actually multiplying the money and also protecting the money, because number one thing is that you don't actually need much risk to protect your money. You actually protect your money with clue and very conscious mind. Protect it very well, okay. So that is the difference between saving and investing. In saving, you are just trying to protect the money without thinking about the money bringing profit or bringing another income. You are just it's just about trying to protect the money. Or if it is 100k, we are trying to make sure that 100k is there. But investing is the consciousness of trying to grow that money from that 100k, even when it is not, you are not putting it into business, day-to-day business that you be running about. You make sure that you put it somewhere that it will be working, so that it will bring in more interest. So that is the difference between saving and investing. Please, if you can hear me, can you say hi? Just type hi. If you can hear me, say hi. Type hi. Let me make sure that someone is hearing me. Good. This is great. Great. Okay. So in this introduction now, I have talked about stocks. I talked about that you don't actually need to be at a particular age for you to save. At any age that you are, whether you are still young, you are old, you can save. And I also talk about growing money, protecting your money and multiplying it. And I also talk about financial discipline and your financial IQ, what you know about money, how to put your money to work for you. Okay, so now let's understand how stock investment works. Stock investment is you putting your money, investing your money in a company that is listed in the stock market, in the NGS stock market. Now, when you invest this, with time, the money will grow. Why are you giving this money? It's for the company to use it to expand the business, that particular business that you invested it is in, so that with time, when they expand the business will grow, and also you will have your own profit. Because when you are buying the stock, you are being a part owner of that particular company. So you have the right to get the profit they make with the money you invested. All right. So now, from our outline, let's go to what is the stock market. The stock market, as it is said, stock market. When we hear about stock market or market, let's think it as our normal local market, that you go there to buy something or you go there to sell something. Okay, so stock market is a platform where stock are being bought and sold. Stock market is a platform where stocks are being bought and sold. Or you can say that stock market is a platform or a place or a marketplace where stocks are being traded. Okay, so that is simply what is stock market. That particular platform a kind of marketplace that you can sell your stock or buy a stock and also hold the stock there. Okay, so now let's move into types of stocks. Let's move into types of stocks. If you can hear me, can you say hello? Say I can hear you. Types of stocks. So in the types of stocks, we actually categorize stocks into 5. We can categorize stocks into 5. And in the first category, we have what we call growth stocks and value stocks. Growth stocks and value stocks. Growth stocks and value stocks. Now, when you are talking about growth stocks are stocks that the company are expected to grow fast. Maybe you find a company that is actually maybe younger. The company is just starting, but they are building strong fundamental. You know that the business that they are doing, the economy will favor them, the country will favor them, their management is getting better, their fundamental is very strong, that with time they can grow very faster, or they are dominating the marketplace. Okay, so that kind of stock is called growth stock. And one thing about this is that they don't actually pay dividend. Most times they don't pay dividend because they use the money they make in profit, because every dividend that any company is paying actually comes from the profit they made. So this kind of growth stocks, they don't actually pay dividend because they will reinvest their profit into the company in order to keep growing the company. So their focus is on the growth of that company. They're actually focusing on how to grow that company. So any profit they make, they will put it back into the business to keep expanding it more. And the best way you can make money from this kind of stock is that your capital will be appreciating, which we call capital appreciation or capital gain. Okay, now we all have other types of stock in this category, which is the first category, which is one which is called value stock. Value stock is when you do your fundamental analysis, when you do your price to earning ratio, and you find out that the price to earning ratio of this particular stock is very low. You see that this stock is undervalued. That means that the price that this stock is selling at the stock market, this price that this stock is trading at the marketplace is very low when compared to its fundamental. So the fundamental or the strength of that business in the actual sense is very high than the amount it is being traded in the stock market. So you see that such business is a undervalued stock or is a value stock. Okay, so example of them is Access Bank. Access Bank is trading at 23 naira now, and when you check about Access Bank, every 8 in 10 Nigerians actually know what is Access Bank. Every 8, if not all, every 8 in 10 Nigerians knows Access Bank. So Access Bank has this strong fundamental. They have established the business, but the stock is actually still trading at a low price. Like when you compare to GTCO, Zenith Bank, which is above 100 naira. So Zenith Bank and UBA is actually considered to be a value stocks. Then let's move to category 2. Let's move to the second category. The second category is what we call income stocks and non-income stocks. income stocks and non-income stock. Now we are trying to compare about company that pays dividend, companies that pay dividend. So when we are talking about income stocks, they are also called dividend stocks. Income stocks are also called dividend stock. These are companies that pay dividend. They are regular pay dividend. So we might say that this company that they have established, that is why they don't reintegrate the profit into the business again. So they wish to pay dividend, which is the profit they make from their business activity. So they will share the profit among the shareholders. Okay, so example of this kind of income stock, which are dividend stocks or company that pays dividend. One is GTCO, Dangote Cement, Zenith Bank, and all of them. So this kind of stocks or company, they pay dividend regularly. Okay, now let's talk about non-income stock. Non-income stocks are stocks that does not that do not pay dividend. Income stock, non-income stock is simply any stock that does not pay dividend. What they do is that they reintegrate the money they make in their profit into the business again. So they are called non-income stock. Any company that does not pay dividend is regarded as non-income stocks. Now, when you are talking about the risk level of a particular company, the risk level, you are trying to see how the risk level of a particular stock. When we are talking about the risk level of a particular stock, risk level of a particular stock, risk level of stocks. So we have penny stock and blue chip stock. Blue chip stocks are stock of company that have established, stocks of companies that have established. They are large, they are strong, they have stood test of time when compared to economy. So when the economy may be shaking or when the economy is favorable, they can resist the kind of tough economy, and they can withstand and actually perform relatively good. They are kind of suitable and reliable over time. So example of this is Dangote Cement, the MTN Nigeria, Zenith Bank, and all of that. So despite what will happen, they will actually kind of survive the economy. So the next one is penny stock. The next one in this third category is penny stock. Penny stock is very cheap stock. Penny stock is a very cheap stock. In the Nigerian stock market, we consider any stock that is from 5 naira below as penny stock. But in my own definition, penny stock are stock that are just new, they are too flexible, or they are too risky, and that makes them to be listed with the amount maybe less than 10 naira. So let's understand this. If we say that blue chips are stocks that the company have established, are strong, are large, that means penny stocks are stocks that the company is not yet large. They have not built that momentum or the strength in the stock market. So they are a kind of flexible to their economy. If the economy threaten the business, it will actually go down. So they have high risk because they don't actually have strong fundamental. They are still growing. They are still at the early stage. Or they have not survived to a point that they are strong enough. So they are very risky. when you invest your money, because small thing will actually affect them. Small thing will actually affect their fundamentals, will actually affect their earnings, the business. So they are very risky. The price can go up and go down, like very risky. So but one thing about them is that they have great potential, because they are still at 5 naira and below. When you invest in them, they still have future. They have future, because all the stocks that you are seeing in the stock market, they one at a time started as a new company. So if you can give them time that they can grow, they are like high, they have high potential for reward. Okay, so example of a kind of a penny stock is a sovereign trust insurance, Japan Gold and Ventures. So now let's quickly go into the fourth category. The fourth category. Please, if you can hear me, can you type hi? Let me make sure that people are hearing me. If you can hear me, say I can hear you. So the fourth category, we are trying to compare stock based on the behavior in different economy. We are trying to compare stocks based on their behavior to the economy of the country. So in this category, we have defensive stock and cyclical stocks. Defensive stock and cyclical stocks. So someone asked, please, what is the second category? The second category, I said, is we are trying to differentiate or compare company that pays dividend and company that does not pay dividend. And then we have income stocks, which is otherwise called dividend stock, and then the other one, which is non-income stock, the one that does not pay dividend. Okay, so that is number 2. Let me go back to the number 4 where I was before you asked your question. Please, if you also have a question, put it down here. If you have a question, put it in the chat. I will answer your question. So the fourth one, we are trying to compare companies according to how they perform, or their performances, or their behavior to the economy. So we have what we call defensive stock and cyclical stock. So defensive stock are stocks that perform relatively well even during every economic downturn. During even economic downturn, when the economy is shaking, or when the economy is threatening businesses, that is not favorable to businesses, so they can still survive. So when we are talking about defensive stock, we are talking about stocks that even if the economy is bad, they must survive, they must thrive. So what are those companies? So can you think about a particular company that can actually survive even when the economy of this country is going down or is unfavorable to businesses? So let me quickly go into the examples. The example is Nestle Food. That is Nestle Nigeria. They produce food material. No matter how the economy is, people must eat. Even if you have 1 naira, and if you are making 1 naira, that 1 naira must be for you to eat. So this kind of company, even if the economy is bad, people must patronize them, because no matter what, people must eat. Even if you are making 1 naira in the bad economy, you must try to eat. So that is the first thing. This or else you can reduce how you eat, but for sure you must eat. So the next one is MTN Nigeria. There's no how bad economy will bridge communication, because banks are using data to run their day-to-day business, banking operation. They must stay online to see transactions, to do all they need to do. and all of that. Many companies, even companies now, are creating content. Many companies are creating content as a kind of marketing content. They are using content creation and videos to market the products and their services. So companies are actually using MTN services. So there's no how the bad economy will breach communication. And even nowadays, many people here in Nigeria are content creators, so they must use data. So even when the economy is getting worse, people must be patronizing MTN, buying data to stay online and be creating their content. So nowadays, data is a kind of a life of social media, and people are actually making huge money on the internet. So let's talk about cyclical stock. Cyclical stock, these are stocks that their performances depends on the economy. When we are talking about cyclical stock, their performances depends on the economy. They will do well. When the economy is kind of doing very tough, they will be struggling. So when the economy is strong, they will actually do well, but struggle when there is a kind of recession in the country's economy. So what are stocks that we can find under cyclical stocks? So stocks that involve in construction and luxury goods. Stocks that involve in construction and luxury goods. So example of them is Dangote Cement. Dangote Cement, why is Dangote Cement here? Dangote Cement, when the economy is bad, nobody will actually want to build a house. Even people who will have house projects, people who may have housing projects, then we pause on it because no money is actually coming, and there's no money to buy cement or buy building materials. So people will actually pause the housing project and wait for economy to redress, and then they will continue. So Dangote Cement is one of cyclical stock, because when the economy is not good, people will not actually start building houses. It's when the economy is favorable that people will even start buying houses, developing or even renovating the one that they have built before, or even buying old ones and renovating it. So Dangote is one of the cyclical stock. If you have any question, please be putting it in the comment section. I will attend to that later. So another example of cyclical stock is also Bua Cement. Then let's check number 5, the fifth category, of type of stocks. Then now we are trying to actually divide stocks into two in their broad sense. You are trying to divide stocks into two in their broad sense. So we have common stocks and preferred stock. Common stocks and preferred stocks. Common stocks and preferred stocks. Common stocks are all these. Can you hear me? So in common stocks, it is much popular. It's all this kind of stock that we buy in the stock market. They give shareholders voting rights, and the shareholders, they have a kind of dividend, a potential dividend attached to a kind of potential dividend. And then the example of these are all these stocks that we buy in the stock market. There are Access Holdings, Zenith Bank, Dangote Cement, and all of that. Okay, now we talk about preferred stocks. Preferred stocks are usually a kind of this kind of stock is in between bond and equity markets. When we are talking about bond and equity market, is a kind of in between the equity market and bond. So it's a kind of you investing in a company, and then you have agreements with that company about your dividend. You say that this money that I'm investing, oh, I'm investing it in your business, and this you be giving me this amount of dividend, the percentage of this every year. So the dividend for preferred stock is fixed. It is not like this one that some company will say this year we will be paying 10% dividend. Like the dividend yield is 10% of 7, 8, or 5%. So but this one, the dividend is fixed. So you get to agree with the company, and your dividend will be fixed. So every year they will pay you a fixed dividend. So but here, one thing about here is that you don't have voting right as people who have common shares or common stocks we have. So and they are regarded as a kind of let me say senior citizens. When companies are paying dividend, they must pay people who are with preferred stock first before they will pay people who are with the common shares. Okay, so uh, let's also look into the sectors of stocks. Sectors of stocks. So when we are talking about sectors of stocks, we have about 12 sectors of stocks. One is agricultural sector. One is agricultural sector. So be paying attention to this, be attentive to this, so that you won't ask me any question regarding this, because I want to end this class in 1 hour time, but we still have a lot to say here. So we have the agricultural sector, which this sector involve companies involved in farming, food production, and agro processing. Companies that are involved in farming. Farming includes all kind of branches of farming or agriculture, from crop farming to palm production to timber to livestock production, and to every extent even rearing of animals, and all of the all kind of farming. So these are companies that we can classify under the agricultural sector, and they also involve companies that process all those agricultural raw materials. Companies that process all those agricultural raw materials, agro processing industries. So example of them is the Okomo Oil Palm PLC, Palm Company. I mean, we have a Presco PLC. We have Livestock Feeds, the company that produce all kinds of livestock feeds. Okay, so let's go to number 2. I will rush this. Number 2, we have a conglomerate. Conglomerate is a kind of business that has different branches. Like if Dangote Group was to be listed as a one company in the stock market, it would have been under this conglomerate, because Dangote has Dangote Sugar, Dangote Cement, and they are also trying to list another one, Dangote Refinery. So it has kind of different branches of businesses, but Dangote is listing its own differently. So when we are talking about conglomerate, these are companies that have different branches of business, but they listed it as one. So the example here is a UAC of Nigeria PLC. We have a Transnational Corporation of Nigeria. Then let's quickly go into the third sector, which is construction and real estate. They deals with building and property development. What they do, they do with construction, housing, property investments, and all of that. Example of them is Julius Berger PLC and UPDC PLC. UPDC PLC. So let's go to the number 4. The number 4 sector is consumer goods. Companies producing everyday item that we use. The everyday item that we use. Company that produce everyday items that we use. Maybe toothpaste. When you are talking about consumer goods, it's not actually something that is edible. All this everything you can regard as consumables, even toothpaste, all of that, everything we use from day to day in our homes are regarded as consumer goods. So what they produce, like company that produce food, beverages, household products, and all of that. Example of them is Nestle Food, Nestle Nigeria PLC, Nestle Nigeria PLC, even Nigeria Breweries PLC. We have Dangote Sugar. Dangote Sugar. Then let's quickly go into the financial sector, the financial service sector. Financial service sector. In this sector, in the Nigerian market, or in the Nigerian popular saying, the most thing we consider here, we actually call it banking sector. We call it banking sector because most of the financial services company that we have here are the banks. So people just call it banking sector. But in this financial sector, we also have like insurance companies and companies that deals with investment. So perfect example of this is Zenith Bank, GTCO, Access Holding, all these banks. Okay, so the number 6 here, the sixth sector, is healthcare. Companies in medical and pharmaceutical businesses. All these companies in all these medical businesses, maybe they have hospital, big hospital, they produce medical equipment, drugs, and all these medical supplies, all of them. Okay, so example of them is Fitson Healthcare PLC. We have May and Baker Nigeria PLC. We have Mikio, and what is the other one? Is it Nemet? Nemet, that should be. Okay, so let's quickly go into the sector 7. Sector 7 is ICT, information communication technology. In Nigeria, in the Nigerian market, most of the companies we have here are the telecom. But when you compare to the US market, they have Metas, all these social media apps that are listed in the US stock market. So, but here in Nigeria, we actually have only the telecoms. Though there might be other, but the telecoms are the main performing companies here. So we have MTN and Airtel in the ICT, which are the telecom companies, or you call them the telecom sector. Then number 8 we have here is industrial goods. Industrial goods. Industrial goods are heavy manufacturing and building material companies. So they produce cement, packaging, and industrial inputs like paints and all of that. So example of them is Dangote Cement, Bua Cement, and etc. So let's quickly go to number 9. Can you hear me? If you can hear me, just say hi, type hi. If you can hear me, type hi. Okay, So so the nine here is the natural resources sector. The natural resources sector. Natural resources sector. The natural resources sector, they deals with extraction of raw materials that are not crude oil. So the natural resources sector, they deals with the extraction and mining of all these natural resources that are not uh, oil and gas, because oil and gas is a sector of its own. Okay, I can hear someone say that my voice is very loud and clear. Thank you for the response. Thank you for the feedback. Okay, so when we talk about this natural resources sector, the company we can find under them is a multiverse mining and exploration PLC. So they do with mining, all these quarry company, and also all these solid minerals. So that is what this kind of uh, natural resources companies, the companies that fall under these natural resources, what they do. Okay, so why this thing is very important is so that when you are investing in a particular stock, you will actually know what they are doing, what that particular company does, so you can know what is their product, people they are producing that thing for, who are their customers, and how the economy will actually affect them. Okay, so when we talk about the oil and gas sector, as I have mentioned before, there are energy companies dealing with petroleum. They do with exploration, refining and distribution of oil, because not every companies not every company in the oil and gas sector actually produces oil or refine oil, like Dangote refinery. Some of them are just kind of distribute the oil, maybe they import and also distribute, you understand. So example of them is Seplet Energy PLC. We have Orlando, and when this Dangote refinery will be listed in the stock market, it will be under oil and gas. So the 11th one here is the service sector. The service sector. The service sector. The service sector are just support-based businesses. They are support-based businesses. They do all this logistics, aviation, and outsourcing. Logistics, like, I don't know how many of you that knows how many of you that know what they call it, enviable group, enviable transport. There is an interview that I heard enviable transport, the CEO of enviable transport, saying that they are planning to list, or they are even in the process of listing enviable transport in the stock market. So when it will be listed, I think it will be under the service sector. It will be under the service sector. So, but the perfect example that we have here is the DACOM, the Red Star Express PLC, the NAHCO, that is NACO PLC. The NACO PLC. So the kind of their performances depends on the economic activity, because when the economy is actually more favorable, people will not use flight, people will use actually road transport, and they will find the more cheaper ones. So the performances depend on the economic activity. Now Let's talk about the utility sector. The utility sector, there are just they do with the essential public services. They do with essential public services. They produce power. They do with energy distribution and water, all of that. So I used to say that if NEPA uh, is to be listed in the stock market, it would have been under this utility sector. So, but the perfect example we have here is Transco Power PLC. Transco Power PLC. All right. Now that we have dissected and digested these financial sectors, this is actually making you to understand the sector that each stock falls in, so that you know what they do, how the economy affects each sector, so that when you are doing your fundamental analysis, you will check all these things. All right. So let's move to the last thing that we have in our outline for today, which is how to invest in the stock market. Please pay attention to this. How to invest in the stock market. One here is choosing a broker. The first thing, many people usually do mistake here. They just go and maybe download one stockbroker, create account, and maybe they may not even know how to do the KYC so that they can get the CHN and CSCS number. So, but the first thing here is you choosing a broker. Choose a broker. What should you check while choosing a broker? Number one is the fee and charges. The fee for each transaction. If you want to deposit, how much are they charging? If you want to deposit money into your wallet or into your brokerage account, how much do they charge for the deposit? When you want to buy stock, what are the percentage charges to whatever they are charging for? The VAT, the brokerage fee, the CS and CS, what they call it, stamp fee, and all of that. What are the charges? So the second one here, what you should check is if that particular stock is SEC and NGS registered or licensed. SEC, I mean, is Security and Exchange Commission. If the Security and Exchange Commission actually licenses that particular stockbroker, okay, then you check if the NGS, the Nigerian Exchange Group, actually licenses that stockbroker. Then the third one you should check while choosing a stockbroker is the customer support. Support in the sense, maybe if you are making a payment and maybe the money is delaying, you have made the payment and it has not reflected on your dashboard maybe for days. If you call this broker or if you write to them through email, will they actually respond immediately? Will they respond to your email and also correct the issue, help you sort out the issue? So that is what we mean by customer support. Then when we talk about the number 4 here is the minimal investment amount. Choose a broker because there are brokers that only allow you to put 5k, to deposit 5k, or no, to make a purchase above 5k, above 5,000 naira. So whenever you want to make a purchase, you must purchase a stock that must amount or above 5,000 naira. So, but there are still other brokers that you can make a purchase of even 100 naira or less. So these are things that you should check so that you know if it meets with your investment capacity. Because if you are actually kind of someone who is earning low, or who is still saving bit by bit, because one thing about investing is about compounding. It is about compounding. So is it actually that you can invest 5k, 5,000 naira at a time, or you are kind of person that you want to be putting small small money into the stock market to it compounds? So that is the number four. Then the number five is access to local and international stocks. So there are stockbrokers that only limit you to Nigerian stocks. They will not give you access to check. When you are choosing a broker, you should also look out for this, so that maybe your portfolio will not be limited to only NGS stocks. Because when you have all this, they will give you exposure to other profitable stocks. So the sixth here is the research tools of that particular broker or their investment advice. Research tool is do they actually have a good stock chart? That is trading chart, that when you look at it you can actually understand how stock is behaving. Or at times they used to give investment advice. Or at times, can this stock actually tell me what percent that a particular stock rise or fell during the marketplace or yesterday, so that you can know when to invest in the stock market? Okay, so that is for choosing a stockbroker. So when you have done all this and choose a particular one that suits your choice and your investment choice, you then download it. Once you download it, you start creating your account. You create account with them, you do your KYC, know your customer. You get to link your name, your BVN, your bank account, and all of the details that they will need from you. Okay, so after that, they will help you to provide your CHN and CSCS number. Okay, so number three here is you funding your wallet. You can easily see where to fund your wallet. Is either add money, deposit money to your wallet or to your account, depending on the language of that particular stockbroker. So you click on, is usually a plus sign. You click on it, it will generate either a wallet ID or a permanent account that you will be transferring money to, and it will reflect on your dashboard in that particular stockbroker. Okay, so that is for funding your account. So you can, when they give you the account, you can either pay through transfer, through card payment, or through even USSD, depending the one that you choose that you want to pay through. Okay, then also when it reflects on your dashboard, they will also send you a mail that you deposited a certain amount according to my own stockbroker. Please, if you have any question, put it in the comments. Put it down. After, I will go through that and answer some of the questions. Can you hear me? Can you hear me? If you can hear me, please say hi. Can you hear me? All right. So I don't know if you have any question. Just put it in the comment. If you have any question, put it in the comment. I will get to answer you. So now, let's talk about how to buy a stock. How to buy a stock. So when you are buying a stock, number one thing is to pick a stock of your interest. To pick stock of your interest, because when you get to the stock market, or before you even get to the stock market, you must have a stock of interest, the company that you wish to invest in, or you must have a company that you want to invest in. Maybe the Dangote cement, in the banking sector, GTCO, Nestle food, that is consumer goods, oil and gas, that is Seplet and Nando and all of that. So you must actually have a stock of interest, or the one that you actually want to invest in. So you pick them. And then you start with your fundamental analysis. You analyze that stock. When you pick a stock of your interest, or maybe 2 or 3, you start to analyze them. So companies used to release their financial statement 4 times in a year. They have the Q1 financial statement, the Q2 financial statement, the Q3 financial statement, and the Q4 financial statement. The Q1 is from January to March. Then Q2 is from April to June. Then Q3 is from July to September. Then Q4 is from October to December. So from this period or interval, they will release the financial statement. All this Q means quarter. Quarter one from January to March. Quarter 2 from April to June. So quarter 3 and quarter 4. They also release half year. That is from January to June. And also they have H2, that is that half year part 2. They even have full year financial statement. Okay, so when you get this, there are things that you should look out into: the income statement, the balance sheet, the cash flow statement. The cash flow statement. Okay, so then one thing for you as an investor is for you to understand the financial statement of a particular company. It's for you to understand the financial statement of a particular company, because there are some calculations that you need to do. So, but in your fundamental analysis, these are the things that you need to do. You understand the stock first, the sector, the types. The sector, is it a consumer goods sector? Is it under consumer goods? Is it under industrial? Is it under oil and gas? Is it under telecom? Is it under banking? So when you understand the sector, you also understand the types. The types, which is falls in: is it a dividend paying stock or non-dividend? Is it a defensive or cyclical stock? You get to answer understand this, or it is a kind of dividend and also a defensive stock. You just understand all this about the stock. Then also you get to understand what the company does. What the company's products and services. If the company is a company that produce products or they render services, you understand which kind of products do they produce, which kind of products do they which kind of service do they render. Okay, you also understand their customer. You get to ask the question to ask yourself, who are their customers, who are their customer or the audience. So you get to understand how the economy might affect them. Is the economy favoring them? For the past years, the way the economy has been going, is it favoring them? How the economy is affecting the company. So you check their competitors. Their competitors. Is there any other competitors that can wipe them off the market? Like let me say Dangote and Bua Cement. You know, they're kind of competitor because this one is producing cement and this one is also producing cement. So you check for the competitors. Even in the banking sector, we have many banks. So you check the competitors. Are they easy to be beaten by other banks? Who are their customers? Do they actually have a strong customers and all the audiences, all of that. So you check their risk. What are the risks? What will happen? What will happen now that this company will fail? What will happen now that this company will lose money? So these things are the things that you need to ask and understand about that particular company. You also try to understand how the company is managed, the management of that particular company. Is the management very tight or they are just playing with it? Is that company well managed? You check the management of that particular company. Then you also check the financial health of the particular company. You check about the growth, the revenue, the profit, the value of the company, the value of that company. You try to do a kind of valuation of that company. You will also try to know if that company is stable, the stability. You also check the risk and all of that. So, and as I have said before, you need to understand the financial statement or financial report of companies, like the Q1 financial report, Q2, Q3, Q4, half year, final year, and all of that. So when you understand that, there are few things that you need to calculate. There are few parameters that you need to get from the financial statement to calculate some certain things, which are: number one, the earning per share, earnings per share, which is abbreviated as EPS. You understand price to earning ratio. This is number 2. Then number 3 is price to book ratio. Number 4, dividend yield. Dividend yield. Okay, so number 5 is return on equity, also abbreviated as ROE. Number 6, return on assets, also abbreviated as a ROA, return on assets. Number 7, you also understand, also calculate the debt to equity ratio. Number 8, you understand the current ratio, and number 9, you also calculate the operating cash flow, the free cash flow, the operating the capital expenditure, and all of that. So these are the things that you need to calculate at your own when you see the company's financial report or financial statement. Okay, so there is a particular platform, or let me say there are particular platforms that can help you with these calculations. Okay, they can provide you with the calculations. All right, so when you have gotten all this and the company is fit and good to buy, because one thing you do in financial analysis is to know whether this company is good to buy. In financial analysis, you check for what to buy, Then we have technical analysis, which is about when to buy. Financial fundamental analysis is what to buy, trying to find out what to buy. Financial fundamental analysis is to get a particular stock to buy. Then technical analysis is trying to know when to buy the stock, when it is perfect or considered accurate to buy the stock. So in your technical analysis, you check about the liquidity. The liquidity can easily be gotten from the ask bid ask spread, volume traded. You also check for the volatility. You check if a kind of person who is much interested in the trading. You also learn about resistance, support level, pullback, retracement, and trends of the stock. Okay, you also when you have gotten all this, you look for a good entry level. Entry level is when it is good for you to enter into the market. This is actually when the stock falls, the price of the stock falls or draws back or retraces for you to enter, so that when it increase, you will then start making profit. Now when you get to that entry level, you can then start buying. Buying is what we call buying strategy or investment strategy, which we have naira cost averaging. Naira cost averaging is dividing your money into parts. If you want to invest like 200,000 naira, you divide it into 4 parts. Invest 50 first, invest another 50 like 2 months or 2 weeks later, invest just in different times. What this is helping you to do is that if it happens that the first time that you invested is the highest point, so that you won't just invest all of that in that particular amount, and when you do that, the average price will be lesser than the highest point that you ever invested while investing with naira cost averaging. Can someone hear me? Can someone hear me? Okay, so let's continue. Then when you do this, you make your order. In order, we have types of order. We have market order, we have limit order, we have stop order. Good. So in types of order is like instruction to buy or to sell a stock. Instruction to buy or sell a stock is what we call order. Then we have types of order. We have market order. Market order is the price of the market, the current price of the market at that point you want to buy. Limit order is the price that you tell the stockbroker to buy for you. Then stop order is telling a stockbroker if a price of something is going up or down to buy at a particular price. You tell the stockbroker, please, if this stock wants to go up, buy for me. Let it not go up before I buy. Just if it is at 50 naira and the stock is about to increase to 51 naira, please buy for me at 50 naira immediately. Or when you want to sell, using stop order is telling the stockbroker, please sell this my stock for me when it is at 50 naira before it went down to, it will go down to 49 naira or 48 naira. So that is what is called stop order. Then when you make your order and your order was executed or is executed, it will appear on your portfolio. So then you start monitoring your portfolio. From time to time you review it and balance it. If there is a particular stock that is declining very badly, you can choose to sell that stock and then balance it with another one. If there is any sector that is more performing well or there is any other stock, you can balance it. You just keep reviewing, you check your portfolio from time to time to see how they are performing. Okay, so that if there is need for you to do a stop loss strategy, you play it on them and get your money before it starts depreciating badly. So I don't know if anybody has a question, call it a day from here. So if you have a question, just put it down below. Somebody asked, what is the right stock to buy? The right stock to buy, I cannot tell you the right stock to buy. I can teach you how to know the right stock to buy, and that is what I'm doing here. So you do your fundamental analysis. I cannot be telling you how to a particular stock to buy. What I'm here for is to make you to know how to know the right stock to buy, how to choose the right stock. So it's not about me telling you. If you look into my page on Facebook, you see that I hardly come out to tell people buy this stock. Even that thing is only limited to financial advisors. So telling someone a particular stock to buy is limited to that person's financial advisor. So I don't actually come out to tell people buy this stock. I can teach you how to choose a stock, how to do or analyze a stock, how to do your fundamental analysis, how to analyze a particular stock, and then know if it is good for you to buy. So I can't just come publicly and be telling people come and buy this stock, even if I have done my own fundamental analysis and it is good for me. I will leave you to do yours so that you can understand it, because I will not be advising you every time. What I need to do is to make you to understand, to have the knowledge, so that when you see this stock, you see it, you do your fundamental analysis, you analyze it and know if it is good or it is not for you to buy. I'm still going through the questions here. Someone say, what is the easiest way to understand the fundamentals? The easiest way to understand the fundamentals is you actually becoming conversant with the fundamental analysis. You have to stay close to be informed about a particular stock. If you want to invest in a particular stock, you should at least read about them, know all these things that I have mentioned, what the company does, maybe the recent news, what is actually going on in the company, so their customers, their product, and all of them, their financial reports, their Q1, Q2, Q3, Q4, and full year financial statement. Know the price per share, price to earning ratio, price to book ratio, the dividend yield, return on equity, return on asset, debt to equity ratio, current ratio, operating cash flow. Okay, someone asks, which stockbroker app can I recommend? One thing about stockbroker is that many of them have different features, and then for that I don't actually use one stockbroker, though what I use mainly where I invest my money now is Bamboo, but I use other stockbrokers to analyze stocks. So it depends. It depends. Why I'm actually using Bamboo is that it's it gives me access to US stocks and some other investment opportunities. So, but for stock analysis, maybe dashboard, that is a technical analysis, I use other stockbrokers. Okay. Someone asks, how do you she Timothy Ajo should be he. How do how can he know he's a stockbroker? Your stockbroker is actually the particular app or the platform you are using to buy stock. So your stockbroker is that platform that executes your trade, that you used to make a bid, that used to bid, to make offer or bid, that used to buy or sell your stock. Please, if you have other question, end the class for today. So someone asks, which app can be used for analysis? That is what I said. Many apps have different features. So that is why I use not one and not two. So when I look at this, like trading view, I use it to see charts, candlesticks. So when stocks when a particular stock is actually going down, that is a downtrend, I look at it to see the candlestick. Is it what later happened? Is it the buyers that later won? Is it the sellers? When I check those things, I will then be calculating which time to put my money into the marketplace. Okay. Which app can someone use to analyze the market? That is what I just answered. Okay, someone said I talked about defensive stock and cyclical stock. Cycle. Should I spell? Should Okay, can I actually respond immediately? So cyclical stock is a CYCLICAL. 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 Cyclical stock. If you still have another question, put it in the comment section. I think we still have like 2 minutes and I will end the class. Someone asks, what is the best app to use? I can't actually answer that, but I can actually answer you what I feel is the best app for me, because I don't know your experience with other apps, because for me, I'm not actually using every other apps, and for that, my experience with with all the apps are limited because I'm just using few. So I have not used all of them that I can know the best, but I know the one that I'm using is actually working for me. So if you ask me which one is the best for me, I can be able to answer that. Okay, someone is asking, please give the list of websites that will generate a balance sheet of a company. Every company is mandated to post their financial reports in the NGS markets, in the NGS group website. So all these are what I teach people that are under my private mentorship. I will show them, and also a kind of way to calculate all these things, because there are much to this. This is just our first day. This is what I taught yesterday that I repeated here because of the issue we had yesterday. with the class and limited participants for WhatsApp. So someone is asking, what about this NGS saving bond? Please, what I'm into is the stock market. Maybe other times I will talk about the federal government saving bond, but for this class I'm specializing on stock. I have learned to specialize than to diversify every time. Okay, so for this class is about stock, the equity market. Okay. Okay, someone say if I can drop a video on this your YouTube channel for this on this. Okay, I will try. Okay, someone asked how much it is to join my mentorship. So in my mentorship, if you actually look at my Facebook profile, I pinned it to my Facebook profile. When you check my Facebook profile, that is the first post you can see. When you check my Facebook profile, the price is 20,000 naira. Currently I have about 5 students who have registered, so I'm taking 5 students on this. So the price is 20,000 naira. When you join, I will help you to register, get you a reliable broker, help you to get your CHN and CSS number, then give you this education. This is not just only what I teach them, this is just few class that I wish to give to you guys for free. So if you are interested, I have much. I think this class must have wowed you enough, or have answered most of your question, or have exposed you to greater knowledge that you don't know before about the stock market. Okay, so this is just a bit of what I teach in my private mentorship. So there I can teach you this fundamental analysis. See, the heartbeat of stock investment is the fundamental analysis. And then for fundamental analysis, you must know how to understand companies financial report or financial statement, which comprises their balance sheet, their income statement, and their cash flow statement. So all this is what I will digest and dissect for you in that mentorship. So in that mentorship, I will also teach you a investment strategy, like the just one that I mentioned here, but many people might not even be sharp enough to grab it, which is the naira cost averaging. When you want to invest maybe use 100,000 naira, you divide it into 2 or 3 and invest it in different batches, so that if the stock is at 50 naira, when you buy at 50 naira, let's assume it later went down to 45 naira, you also buy at 45 naira. If it goes up to 47 naira, you also buy, and this will make it for you not to buy at the highest price. After it will get to average price, which will be lesser than the highest price that you bought at any level. So that is the things that I teach in my private mentorship. So I teach you some investment strategies, some time tested, already proven stock investment strategy. I also teach about risk management measures, because there are things that you need to do to manage risks involved in the stock market. So people are still asking, do I recommend stock in my private mentorship? If